This is the Asia Train. I'm Shery in Seoul.
I'm Haidi, Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Chinese stocks are set to extend gains after Beijing's top leaders signal bolder economic support next year ahead of Donald Trump's return to the White House. Broader Asian stocks are also set for a positive open despite a Wall Street retreat as investors await US inflation data, Nvidia falling with the China opening of an anti-monopoly investigation weighing. Also ahead, a person of interest arrested in the killing of the UnitedHealth CEO, allegedly found carrying a so-called ghost gun. Plus, with South Korea's ruling party reportedly preparing an exit plan for President Yoon, we get the outlook for the nation's sovereign debt with Fitch ratings. Let's get you straight to the markets. There's, of course, a lot of anticipation when it comes to this pretty critical US inflation print, given some of the repricing that we've seen around Fed expectations in the wake of last week's payrolls numbers. S&P futures continue to sort of extend that muted picture there as we see a little bit of downside there for futures trading. NASDAQ 100 futures are also a little bit softer at this point as well. Watching treasuries, we did have some sort of implications potentially coming through from the New York Fed saying the inflation expectations, consumer optimism, both on the rise in November. That's the inflation expectations on the one-year horizon, looking a little bit higher than the previous month. And we do have also consumers expecting, in particular, energy prices to be higher, as well as food prices as well. So there are sort of some inflationary flutters there, if you will, before we get that key inflation read. But of course, so much of this market is also really down to what we're seeing out of China, which is the signaling of bolder stimulus for next year, perhaps a little bit of more preparation for a potential return of trade wars. We're watching oil as well. New York crude at the moment actually seeing a little bit of a softer part of the trading session, despite broader advances that we've seen across energy as Chinese leaders signaling a more stimulus-friendly monetary policy setting. The demand outlook there getting a little bit lifted, but clearly traders are more cautious about the potential upside there. Take a look at how we are viewing this sort of proxy trade for Australia. Australian stocks are seeing a bit of an upside, about 0.2% higher there. Of course, we are also looking at that RBA decision with that central bank. So at such a different point when it comes to the broader global cycle that we've seen, we'll be really looking into any sort of commentary about that timing, which at the moment is hovering sort of pretty close into the middle of next year. We are seeing the Aussie dollar as well as the Kiwi being sold into that RBA decision amid broader strength in the dollar, Shery.
And Haidi, you mentioned Beijing really boosting those efforts to support the economy, while Chinese stocks now look set for gains when trading opens later today. We already had Chinese ADRs listed in New York gaining ground, Beijing signaling bolder economic support amid a possible trade war with the incoming Trump administration. The gauge of U.S.-listed equities surging almost 9% in the New York session. For more, let's bring in our Chief North Asia correspondent, Stephen Engel, in Hong Kong. Steve, is this the policy move the markets have been waiting for?
And we've all been waiting for, right, Shery? Obviously, we had that big stimulus push that we got at the end of September. That sort of petered out, though, as far as sentiment, and we saw the stocks, Chinese stocks, languish because of policy or promise fatigue, if you will. So again, this is Robin Shing, according to from Morgan Stanley, basically calls this the most aggressive stimulus tone in a decade. So what essentially the Politburo, which is a 24-member all-powerful body in Beijing, led, of course, at the top by Xi Jinping, met yesterday. Then they came out with this statement essentially giving their direction. The Politburo sets the tone. They don't set specific targets. That task is going to be now up to the Central Economic Work Conference, which begins tomorrow in Beijing and lasts a couple of days. That sets the agenda for the National People's Congress in March. That's when we're actually going to get the actual targets of fiscal stimulus, if you will, or what the economic priority is going to be, what the economic target is going to be. But the Politburo set the tone. They essentially said a growth of around 5% and that domestic consumption is a top goal. Will it be the top priority? We'll likely know in March. We possibly could know at the conclusion as well as of that economic work conference over the next couple of days. So what are they doing? They're essentially going to set the monetary policy strategy at moderately loose. This is after nearly 14 years of a very steady, prudent policy. The last time the policy stance from the Politburo was set at moderately loose was during the couple of years of the global financial crisis. They set that in November of 2008, and it lasted in 2009, and it lasted until 2011. So 14 years of steady, prudent monetary policy stance, now going to be moderately loose. That could unleash, of course, a further easing of interest rates, possibly set the stage as well for the issuance of CGBs on the bond market, and essentially have a much more loose policy going into 2025, of course, as you mentioned at the top there, with the threat of tariffs and a trade war coming from the incoming Trump administration version 2.0.
Steve, what else was interesting to you from the Politburo gathering?
Yeah, so they kind of went through the list of the problems that are plaguing the Chinese economy right now. They mentioned that they will address, of course, the stock market. So that raises expectations. Perhaps there could be a stock market stabilization fund. They also mentioned, of course, pledges to stabilize the property sector. That's been a major drag on the Chinese economy. They've also targeted extraordinary measures for counter-cyclical policy adjustments, which hints at greater bond issuance, or again, as I mentioned, that stabilization fund for the stock market. They signaled a growth target of around 5%, which would be the same as this year. And they said they will they will meet those goals smoothly, in their words. And essentially the other issues that they've reiterated over and over again, and that is technology innovation. They're going to emphasize that, building a modern supply chain, and also vowed to implement economic reforms, as they always have, continuing economic reforms, including some iconic measures on economic reform. We have to see what comes through. And of course, Xi Jinping's hallmark of his last more than decade in power has been political supervision, so discipline within the ranks of the party. But really, the key takeaway is targeting domestic consumption for 2025, given the headwinds potentially on the trade front.
Our Chief North Asia correspondent Stephen Angle there with the details. Well, our next guest says investing in China should be focused on the longer term. The coming year may see, of course, the trade war. The tariff threats are weighing low valuations. Burns McKinney is the managing director and senior portfolio manager at NFJ Investment Group. So, Burns, we've been here before, right, where we've seen the enthusiasm as a response to policy language and stimulus expectations, and then those gains tend to fade pretty quickly when they haven't translated into meaningful measures. We may not get those measures until March. Does that matter to you when valuations are this low and there does seem to be a fundamental shift in tone?
I think Stephen hit the nail on the head when he talked about that this, a lot of what investors saw in September when the policymakers announced their, whatever it takes moment with respect to fiscal stimulus, that was something that we've seen before. But the monetary stimulus, it is a bit more aggressive. It is something that you haven't seen since the global financial crisis. And I think that, the saying goes is the first step towards a solution is admitting you have a problem. And, this is really what the policymakers are doing. They know that a lot of that fiscal stimulus, goes towards things like infrastructure and real estate. But what they're really targeting now with this monetary loosening is something that will address the consumer. And that's really the crux of where the problems have been. The fact that, you can stimulate all day long, but you need to drive consumer confidence. And if they can do that, then they can really harness the power of a burgeoning and a growing middle class in China. And, likewise, as you noted, valuations are historically low levels. Right now, the U.S. stocks trade at a premium to their long-term average, whereas Chinese stocks trade at a discount. And that spread is as wide as it's been over the last 15 years of data that we have.
So does that mean you would focus on those domestically oriented names? And if you were to, be a betting man, do you see the next 20% to be up or down for Chinese stocks?
Well, the first thing we do like to caution is that, given the fact that there is a lot of uncertainty with respect to tariffs and trade with the new administration coming in the United States, the next 12 to 18 months in China for investors based in the U.S. could be a bumpy ride. But for investors who have 3 and 5 year and longer time horizons, then you have valuation on their side. And one of the things we look for are companies that have clean balance sheets and companies that can take advantage of the consumer, whether that would be areas like, like the banks, like athleisure, or, some of the tech giants that, that you've had a regulatory onslaught against some of those names that policymakers have now reversed that, and you have headwinds turning to tailwinds.
And a whole different picture burns when it comes to the U.S. and its inflationary trend, right? What are you expecting from U.S. CPI, and how big of a catalyst could it be for markets?
We're probably expecting it to look fairly similar to what it was last month. I think what we've seen in the United States is that inflation has been coming down, and the trend line is very positive. That said, it's been understood that that last mile of whipping inflation should be the toughest part. But the direction is good. If you look at really probably the primary driver of what inflation that we should even have when they report this week is coming from shelter costs. And, shelter costs, that's the one data point that's a bit stale. People don't, renew their leases every month. But if you look at real-time data on that and adjust for it, it appears that inflation figures are really starting to approach what the Fed's 2% target is. And so, really what we're looking for is something that should allow the Fed to, basically, I'm not going to say a Goldilocks situation, but, putting it into that position where the Fed does have the ability to, move on one more interest rate cut at the December meeting.
We continue to see this tit for tat when it comes to geopolitical tensions between Beijing and Washington, right? Whether it's right now, we're hearing China cutting off drone supplies critical to some defense equipment, investigations into Nvidia as well. And of course, the U.S. has more tech export bans against China. How do you invest for the Trump 2.0 administration?
Well, I think that in general, when we talk about how to invest for one administration versus the other, we always suggest that investors shouldn't take a big risk-on, risk-off approach. First and foremost, the U.S. stock market has done 7% per year under Democrats, and it's done 7% per year under Republicans over the last century or so. But there can be some moves under the surface, and probably one of the biggest drivers of those would be the impact on interest rates. You saw as the markets priced in a greater likelihood of a Trump victory, rates go up a little bit. That's partially due to the fact that there's going to be pro-growth policies that might drive growth that would push those up. Might be partially due to expected higher deficits, as well as the fact that tariffs do tend to be inflationary, which would also lead to higher interest rates. So if you invest for that, well, what does that mean? It might push investors away from some of the longer duration, high growth tech names towards things that are shorter duration, things like value stocks, where you get a lot more of your cash flows today. Some of the cyclicals that have lagged over the last couple of years, small caps, and even places like the banks and financials should benefit from that.
Burns, always great to have you with us. Burns McKinney, Managing Director and Senior Portfolio Manager at NFJ Investment Group. One of the movers we're watching at the moment, very early in the Aussie trading session, is Treasury Wine. Of course, there's a couple of stories at play here. One, thematically, of course, this is one stock that really benefits from that China exposure, particularly if their focus is really shifting to boosting consumer sentiment and domestic consumption demand. Treasury Wine, Australian wine brands, will be heavily impacted to the upside, particularly when it comes to Penfolds. But specifically when it comes to some deals news flow, we're hearing that Treasury Wine's estate saying that it's entered into a deal to acquire 75% of Ningxia Stone and Moon Winery for consideration of 130 million yuan, or about 27.5 million Aussie dollars, to develop that site in the future to create a local brand home for Penfolds. That is expected to be completed in the second half of 2025, and that 25% remaining ownership is an option after 5 years to be acquired there. Well, coming up on the Asia trade, we get the latest when it comes to geopolitical developments, particularly when it comes to Syria. Islamist rebels preparing to form a transitional government, apparently with the help from elements of the fallen Assad regime. We have the latest next. This is Bloomberg.
China has opened an investigation into Nvidia over suspicions the U.S. chipmaker broke anti-monopoly laws around the 2020 deal, taking aim at the AI heavyweight as Washington ramps up sanctions. Our executive editor for the Greater China region, John Liu, joins us now for more on this. And John, this is to do with that Mellanox technology acquisition. Tell us what's going on.
So what we know from the CCTV report is that this investigation is related to that acquisition that you mentioned. An Israeli maker of computer networking equipment back in 2020. That deal was approved by the Chinese regulator on the stipulation that Nvidia would not do anything against that would hurt Chinese competitors in that space. And now, according to the CCTV report, Nvidia is going to be investigated on suspicion that it did, in fact, hurt the interests of Chinese companies in that space. We don't know what else might be a factor in that decision to do this investigation. But obviously, with Donald Trump coming into office, with him already talking about putting into place tariffs as a result of trade and the inflow of drugs from China through Mexico into the United States, this would give Xi Jinping an extra bargaining chip if there were a negotiation.
We're already seeing that tit for tat, right? The cutting off of drone supplies by Beijing. These are drones that have been vital to Ukraine's defense efforts. Is this kind of part of the broader picture?
I think the broader picture is that supply chains around the world are being affected by the threat of tariffs, by the use of national security issues as to change the way that trade works around the world. I think that, we've already seen Taiwan, for example, looking for alternative sources of components for drone makers there. We've seen the same in the U.S. And so this is adding to that. All of the sanctions that have been placed on Chinese access to semiconductors, China responding by cutting off or limiting supplies of essential metals to the United States. I think we will see more of this as trade tensions mount.
John, Huawei suppliers also set to face further U.S. limits under a new defense bill. We continue to see this tit for tat between Beijing and Washington.
I think this will continue. I think it'll get even more pronounced when President Trump takes office. He's talked about, again, the 10% tariffs for the flow of drugs, on top of the 60% tariffs that he's mentioned during the campaign that he would impose across all sectors for all Chinese goods shipped into the United States. Whether he does that when he takes office, we don't know yet, but the threat of it is already changing the way that companies are thinking about how they get their supplies of goods, where they order from, and how to do business going into the future.
Our executive editor for the Greater China region, John Liu there. And from China to Syria, the rebel group that toppled the regime of Syrian President Bashar al-Assad is working on forming a temporary government. A member of the deposed administration has told Al Arabiya TV that some of Assad's ministers are assisting the transition. For more, let's bring in Bloomberg opinion columnist John Authers. John, it seems that we're seeing a lot of uncertainty and chaos within Syria. What's the risk of Syria ending up as a failed state like Libya?
Well, fairly considerable. I mean, you could argue that it was fairly close to that status already. There are a number of different people with interests that they are not going to desist from. Obviously, you've got the element of the Kurdish presence there, which is going to provoke response from Turkey. Then you have, particularly in the case of Iran, the fact that Iran has been on the receiving end of some very serious reverses in the last few months, and it's hard to see how it can take this one without some kind of a fight. So yes, there is every risk that this is going to get very complicated and very nasty. Not that it wasn't already very nasty. I guess the fact, if you look back to the Americans in Iraq 20 years ago, one of the very great mistakes they made was in disbanding the Iraqi army, of really starting to do de-Baathification, getting rid of the Saddam Hussein administrators at a very early stage, at a point when they did actually still need them. So it's not necessarily a bad sign if there are hangovers from the Assad administration who are going to be helping.
And of course, part of the reason why this happened now is the idea that Russia, of course, has been distracted. Yes. Iran has been distracted. For Moscow, for Putin, this is obviously an embarrassment.
Yes.
Is it a strategic issue?
I suspect it is. I mean, again, particularly when it's to do with Vladimir Putin, social media will give you all kinds of different rival takes to confuse the issue. But it's very hard to imagine that Russia would have let this happen this easily if it hadn't been involved in such an intense war in Ukraine for almost 3 years now. It's possible that this is a calculated decision that they'll sacrifice Syria, but either way, it's a demonstration of weakness. I think in the case of Putin, who is that much more of a calculated, less religiously driven figure than the people who are leading Iran, that you'll see that much more of a strategic response. But what plainly is true about this is that Russian power isn't as great as perhaps we thought it was, and that does mean that a lot of assumptions need to be questioned.
Bloomberg opinion columnist John Authors, we're doing a lot of questioning of those assumptions as we get into the end of the year. Exactly. Into 2025. We have much more ahead on the Asia trade. This is Bloomberg. This is the Asia trade and the latest when it comes to corporate headlines we're following. Shares of the chocolate maker Hershey surged after Bloomberg reported that its bigger rival Mondelez is looking to buy it. A potential deal would create one of the world's biggest candy companies with combined sales of almost $50 billion. Bloomberg learning that Mondelez has made a preliminary approach to Hershey with a value of more than $44 billion, including debt. TikTok has asked for a pause on the US law forcing either a sale or ban of the app owned by China's ByteDance. If put on hold, it will give the Supreme Court or the incoming Trump administration time to decide on TikTok's future in the country. The company's request came after an appellate panel denied the company's request to overturn the law, which is set to take effect on the 19th of January, just before Trump is inaugurated. More to come here on the Asia Trade. This is Bloomberg.
We're continuing to watch the political developments here in South Korea. Chosun is reporting that the ruling party will disclose an early exit plan on President Yoon on today. The paper also reporting that PPP lawmakers could be attending the next impeachment vote. Our reporter Sang-mi Cha joins us now for the latest. And Sang-mi, of course, the last time the ruling PPP actually boycotted the impeachment vote. But things are so uncertain right now, right? We're just trying to figure out what the next step is. In the meantime, President Yoon has been banned from traveling.
Yeah, he's under several investigations right now, and Justice Ministry is the one that actually, confirms and approves these kind of requests. And this was requested by the Corruption Investigation Office, the CIO so-called. And the CIO head did say that he's not ruling out the chances of detaining him when he was asked whether the office was willing to actually, arrest him. And so this is already seen in the defense minister. He was already detained over the week. And so there could be the several similar steps that's applied to the president as well.
And that is significant because that's never happened in the past. We're still trying to figure out what happens to President Yoon and who actually takes over from him, right? At this point, given that we don't necessarily know what the next steps are coming from the opposition or the ruling party itself, what can we gauge are some of the events that could unfold the rest of the week?
So it could be a repetition of what we experienced just last week. So there could be a motion that's put in place on Wednesday, and then that would mean
impeach.
Exactly, and that would mean on Saturday, that's 72 hours from when the motion is put forward. Then you have 72 hours, and then Saturday we will be waiting whether the ruling party lawmakers will actually come out and vote, unlike what they did not do last Saturday, and that would be the way to go in terms of impeachment vote. But there could be several steps after that. So what happens then in this vacuum? Then usually the prime minister comes in. But yesterday we also heard that the PPP, the opposition party, will actually impeach the prime minister as well. And for impeaching the prime minister, it actually requires less of that vote, apparently. So you need just 1/3 majority
instead of the
parliament.
2/3 that you need for the impeachment vote.
Exactly.
So it's a lower threshold.
Yes, and then it next goes down in order to Choi Sang-mok, who is the deputy prime minister, and so on.
Right, who are they going to try to get to until they get to actually somebody that they want or trust or is part of the opposition Democratic Party? In the meantime, investors sitting on the edge, what are we expecting from markets?
Yeah, yesterday Kospi and Kosdaq both dropped a lot. Kosdaq as well, dropped quite significantly. But analysts are saying that today, after that 4 trading sessions, we might see a technical rebound for the first time, as the futures are actually showing some of the signs. And also, we did see that after that short-lived martial law, though, a lot of billions of dollars worth of market value was wiped out from Kospi. And that's from $1.6 trillion stock market in Korea. So we will continue to see what happens, but we still are watching that bear market territory for Kospi. We're just 2% away from Monday's close. And when the Kosdaq, the small cap Kosdaq index actually drops further, we might see a sidecar kick in. That's like a rule if that refrains you from trading, or the trading for 5 minutes after. So we are watching those developments very carefully.
Circuit breakers for perhaps the Kosdaq. Sang-mi Chow of Bloomberg here, as Haidi, we're also watching when authorities could perhaps deploy that $7 billion stock stabilization fund. We're not sure quite yet, but we'll be following the latest developments here in Seoul.
Still so many uncertainties and political upheaval there. But Shery, take a look at some of the other stories we're following when it comes to geopolitical headlines. Taiwan has put troops on high alert after saying China restricted airspace off its southeastern coast and sent naval vessels near the strait, separating them. It is a potential sign that Beijing is preparing for military drills in the waterway. It follows Taiwanese President Lai Ching-te's recent visits to the U.S. territories of Hawaii and Guam, which China has condemned. U.S. President-elect Donald Trump says he's had communication with Chinese leader Xi Jinping in recent days. It's the first clear indication of direct contact between the two since Trump's re-election in November. He told NBC about the exchange in an interview that was taped last week without specifying what was discussed. India has named career bureaucrat Sanjay Malhotra as the new governor of the central bank. It now ends weeks of speculation over who would lead monetary policy in the world's fastest growing major economy. The Princeton graduate begins a 3-year term on Wednesday, succeeding Shaktikanta Das, who's been RBI chief since 2018. Shery.
And Haidi, of course, we continue to follow the developments in Syria as well, where the Islamist rebels who toppled the regime of Bashar al-Assad say they're setting up a transitional government. Israel, meanwhile, says it's attacked chemical weapons and missile storage sites in Syria, describing the move as a preventive measure. Joining us now is Rudman, professor at the University of Virginia. She previously served in both the Obama and Clinton administrations, including as deputy assistant to the president for national security affairs. Mara, it's great to have you with us. Thank you so much for your time. What do you make of the latest assessments on Syria, and what can we expect from this transitional government?
Thanks. I appreciate you having me at this challenging time in the world. In terms of the latest developments in Syria, certainly this has caught a number of actors in the region and around the world by surprise in terms of the speed with which HTS has come into power on the ground, and how quickly Assad fled, I think it showed just how decayed the regime was, the Assad regime, and the military was really not able to put up a fight. And it also showed the situation with Russia and Iran just not able to back up Assad and his regime. And in terms of HTS, the jury is very much out, though their history in a previous incarnation as al-Nusra was certainly quite troubling, enough to have them put on worldwide terrorism lists, including the U.S. terrorism list. So there's a lot of wait and see right now and trying to mitigate at the margins the worst possible scenarios. Your reference to chemical weapons in that regard is what I'm thinking.
What's the likelihood that Syria becomes a failed state like Libya, and what would that mean for global powers, including the United States?
Listen, there's a lot of concern about the entire Middle East region at this point, and it's a time when there's obviously a great deal of precariousness in the world writ large. The story that just preceded this interview was about South Korea and the unexpected events there. Russia's weakness in terms of not being able to prop up Assad and ultimately bringing him back into Russia is an illustration of how fully expended they are in Ukraine. And China is threatening Taiwan. And this is all happening at a time when the United States is going through transition. We've obviously had many transitions between administrations. I've worked on several of them. But everything about President-elect Trump is without precedent. And so that's obviously also quite concerning, given the number of events in the world, including the situation in Syria, that are so troubling.
Yeah, as you word it, the sort of expertise and experience and level-headedness required to thread several three-dimensional needles simultaneously in terms of how that policy is managed. Do you have the confidence that the United States will be able to do that? And I guess if not, if there's sort of missteps or a retreat in terms of that global influence, what does that mean more broadly for allies and for the US?
So I would say that I have the hope that the United States is able to do this. We certainly have in the United States, as in many other countries throughout the world, a number of very skilled, serious career diplomats, career military, career economic officials. And so it behooves the political leadership, both the outgoing and the incoming in the United States, to fully take and embrace the guidance that they can give at this precarious time. And I believe that's going to be critical, not only for United States security and stability, but for how that interrelates in the security and stability throughout the world.
It's also quite interesting hearing some of the recent rhetoric from Benjamin Netanyahu about Golan Heights and the buffer zone and some of the stripes that we've seen. And we know that the sort of explanation is that this is sort of a preventative security measure. How stretched is Israel at this point, and how does this kind of potentially add to a reshaping of the Middle East? Because we continue to see, multiple fronts for conflicts, both big and small at this point.
So, as I said, it's a precarious time in the region. I would say part of the reason that Syria and the Assad regime was as vulnerable as they were was because of Israel's actions in Lebanon towards Hezbollah. And it's essentially kind of decapitating of Hezbollah and its strength, which Iran used. And Iran also used areas through Syria, and then taking out essentially Iran's air defense. And so these things combined with Russia being stretched thin is what led to the current situation. I actually happen to think that the Golan-related action by Israel makes sense in terms of the kinds of actions that they would be taking at this point to defend their country. It's rare that I agree with the statement made by Prime Minister Netanyahu. I'll just say that. And I think there are many other things in which his leadership of Israel has been quite troubling. But in this case, I think it's a move that made sense for this time.
Mara, really great to have you with us. Mara Rudman is a professor at the University of Virginia. We really appreciate your time. We do have more ahead here on the Asia Trade. This is Bloomberg. take a look at what we're watching when it comes to Aussie assets, of course, as we look into that RBA decision before the policy rate decision, and also in light of China's top leaders signalling bolder economic support expected for 2025. That embrace of the moderately loose monetary policy, more proactive fiscal policy should be having a little bit more of an impact when it comes to the proxy of Aussie assets, but we're not seeing that. Some risk aversion there, some broad losses there, about 1/4% lower, although we are seeing some, the likes of Rio Tinto, for example, Treasury Wines, seeing a little bit more leadership. The Aussie dollar also looking pretty flat at this point, but implied volatility is rising there. Markets currently pricing in the earliest RBA cut for next April, but economists we've surveyed don't see any change until May. Let's get some more from our economy reporter, Swati Pandey. So what are we really looking out for, given that we're still almost 6 months out from expectations of the start of rate cuts? What's in it for us today?
Yes, the most important thing is the language. So the RBA has been saying we are not ruling anything in or out for a very long time. And recent data on GDP was really weak. That was third quarter GDP was much weaker than expected, showing the economy stagnating. The private sector side of the economy is really weak, and inflation's kind of cooled down as well in October, the monthly report showed. So does the RBA need to say we are not really ruling anything in or out? That sentence really is jarring right now. And if they drop that sentence, I think markets are going to take that as a dovish turn. So I think that guidance around how they are reading the economy right now, because we've had some data since their last meeting, which have been more kind of softer. We had business confidence report today, which will come out around 11:30, and that will also give an indication of how the private sector is doing. So all of that put together, the RBA will provide us kind of more of a read around what they think of.
What are the nuances around inflation in Australia at the moment? Because obviously the government heading into an election, the Treasurer would appreciate at least, more tightening being ruled out, maybe.
Yes, exactly. And I mean, the last time we heard from Michelle Bullock was at the end of November, and the key line from her was that inflation is still too high for us to consider rate cuts in the near term. So what is near term, right? That is a question as well. A lot of people think that maybe February is near term, and which is why there are expectations for April or May. Inflation is at 3.5%. And if you look at what has happened in other parts of the world, like it's kind of moving in line. We are kind of moving in line with what has happened overseas. The problem is government spending is very strong. So, on the one hand, the Treasurer Jim Chalmers wants RBA to rule out tightening, but on the other hand, the government, not just the federal government, state as well, like they have been spending gangbusters on tax cuts, on rebates for energy, for rents, infrastructure. So the public side, the public demand is really strong in the economy right now. And without that, in third quarter, the economy would have contracted.
Our economy reporter, Swati Pandey, there with these expectations from the RBA, or perhaps lack of expectations from the RBA. And we're watching BOJ commentary as well going into the end of next week with that key decision. Japanese markets will open at the top of the next hour. Take a look at how we're sitting when it comes to dollar yen. We have seen a little bit of downside pressure on the yen with that underperformance coming as the Prime Minister Ishiba really denying that the government will revise their long-standing agreement between the central bank and the government. That was, of course, set out in 2013, committing the BOJ to that 2% inflation target, and that's kind of been the anchoring in its policy for so long, right? We're also hearing that the Bank of Japan's deputy governor is set to give a speech and hold a press conference in January. That could actually lift the views when it comes to a potential rate hike there. We're seeing a little bit of upside both when it comes to trading in dollar yen, and Nikkei futures looking like we might see a bit more of an outperformance compared to what we're seeing trading here in Australia. Well, Bloomberg senior Japan economist Taro Kimura joins us now with his outlook. So as we head into the Bank of Japan decision into the end of next week, how do you gauge the view on growth, on inflation, and how close we are at this point?
So the momentum for growth and inflation is gaining vigor, and I'm expecting a solid growth and inflation towards next year. That means it actually bodes well for the BOJ's policy normalization, which means the rate hikes. However, I don't expect in next week the BOJ will move simply because the domestic political uncertainty is very high. Although the BOJ is independent from politics, but they need to care. They cannot disregard about that. So therefore, the Congress is now actively debating about passing the stimulus bill, actively debating about the budget. So the BOJ doesn't want to make any waves in such a unstable situation for Ishiba's administration to manage minority government. My view is the January hike.
After the January hike, what happens in the rest of 2025?
So I think the political uncertainty domestically is the only bottleneck for the BOJ to proceed with rate hikes, because they already admit that the inflation data and the wage print is almost consistent with securing long-term 2% inflation. So therefore, starting from January, I think they will move to three rate hikes up to 1%, which is what the BOJ suggests as a minimum level of the natural interest rates. I picked up January, April, and July when the BOJ releases its outlook report. So the data are consistent with the BOJ's signal. So my view is it's really hard already for the Bank of Japan to explain not to hike in the recent macro data. So as long as there's no negative surprises or negative macro shock domestically or globally, I think the BOJ will consistently proceed with hike until 1%.
Bloomberg's senior Japan economist Taro Kimura joining us now with his latest on the Japanese economy. And a reminder that U.S. Treasury Secretary Janet Yellen joins Bloomberg Television on Wednesday for an exclusive interview ahead of her departure. That's at 11:30 p.m. Hong Kong time on Wednesday, 10:30 a.m. in New York. More ahead on the Asia trade. This is Bloomberg. Right. We had the arrest of a person of interest in the killing of UnitedHealth CEO Brian Thompson. This follows a 5-day manhunt. Let's get to the latest from Bloomberg TV U.S. Managing Editor Miles Miller. Miles, great to have you with us. What do we know at this point?
Yeah, right now we know that 26-year-old Luigi Mangione was arrested in Altoona, Pennsylvania. He was at a McDonald's where he was hiding out, he was eating, and it's there where we are told that someone who works at the McDonald's recognized his picture from the wanted posters put it out by the FBI and by NYPD Crime Stoppers, and that's what led them to this tip. They called police. Police arrived and detained him. He was found with a gun that really looked a lot like the gun he used that is believed to be used in this incident, and on him they also found a manifesto. On that gun that they found, there was a silencer. We're told by police here in New York that that gun is a ghost gun. Likely he made it himself. And in addition to that, we know he was just charged in Pennsylvania on having that gun, illegally having that gun on him in Pennsylvania.
Miles, those charges perhaps unsurprising. Does that mean we'll be awaiting other charges that will come?
Yeah, so usually what happens in a case like this is, if someone commits a crime in New York and then flees, typically they are charged in state court, whatever state they're in, and then there's an extradition hearing that happens, and that person has the right to waive extradition or actually be part of the extradition. You see right there live all of the investigators from the NYPD who went down, or went out, I should say, to Pennsylvania to be part of this this apprehension. Among those people there are people from Manhattan North Homicide and folks from the Homicide Bureau, as well as folks from Midtown North. They have spent so much time, Manhattan South Homicide, they spent so much time trying to figure out who this guy is, and they did everything from taking ballistics to taking a smudged fingerprint. They're going to use that and try to match it to this guy so they could say definitively he is the one who pulled the trigger. He's the one that they had been searching for since last week.
Miles Miller there with the latest as we take a look at the live shot of the news conference after police apprehended and questioned a man in the killing of the UnitedHealth CEO Brian Thompson. We know now that Luigi Mangione has been charged over that illegal gun, possession of a fake ID there as well. So we continue to watch this process play out because, of course, the reaction, the sort of public reaction has been truly extraordinary. The days-long manhunt, the killing followed by really the sort of public rage at health insurance as well. We continue to follow this story very closely. The market opens in Seoul and Tokyo are next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens as we watch those China-exposed stocks. Of course, we have seen that rally in anything to do with China after Beijing announced those extraordinary measures to support the economy. But Haidi, of course, that tit for tat between Beijing and Washington continuing. We'll watch semiconductors as China investigates Nvidia.
Yep, semiconductors, drones, we're not even into 2025 yet, and that sort of geopolitical risk is front and centre. But also it's interesting, I suppose the question is whether this is going to be kind of the stimulus mirage, given that we may not expect to hear any detailed measures until, say, March next year with the MPC. Can that sort of enthusiasm for Chinese assets be sustained until then? It's also RBA Day, by the way.
Was it? We're really going to forget all these monetary policy moves that we're expecting. Also, the ECB coming up this week. But so much to watch out for, especially around geopolitics and just broader markets. Take a look at the Nikkei coming online, upside of about 0.5%. A second session of gains. We have seen a little bit more weakness in the Japanese yen towards that 155, 151 level. We do have the BOJ rate decision next week, of course, and we continue to get that solid data out of Japan. We are also expecting the BOJ's Tankan survey as well. Take a look at how South Korea is opening at the moment. We'll continue to see whether that pressure remains. The Kospi and the Kosdaq now rebounding more than 1%. And this, of course, after losing more than 5% since the imposition of martial law. The Korean won at this point, not really doing much, but this, of course, after we neared the weakest level since 2009. We continue to see the developments here in Seoul, whether or not there will be another impeachment vote, whether or not the ruling party will come out today with a roadmap when it comes to what they call an orderly exit for President Yoon. But Haidi, key questions remain here in South Korea.
Key questions when it comes to the rate path forward, when it comes to Australia too, right? We're not expecting, I think the earliest sort of market bets are sort of around April for the start of the easing cycle, but most economists that we've spoken to on the RBA think May is probably more likely. So we'll be looking at the language really very closely out of today's decision. But take a look at how we're faring when it comes to the equity session, a little bit of risk aversion there. And in fact, we're seeing mostly gains coming through from materials, energy and consumer staples, perhaps unsurprising that we'll see the big miners really gaining in light of the China stimulus announcement. The Aussie dollar is holding pretty steady at the moment, 64.36, and watching treasuries as well going into the US inflation data release, as well as taking a look at really broader energy prices. Oil is holding pretty steady at this point, really the kind of China stimulus language shift versus broader concerns about the demand outlook. Let's bring Garfield Reynolds, who leads our Markets Live Asia coverage. And I do feel like I say this every day, particularly particularly over the past couple of weeks, but there's so many, as our previous guest said, multi-dimensional needles that need to be threaded at the moment when it comes to market implications.
Yeah, very much so. The absolute minimum that the markets were sort of looking for from Chinese authorities this week was this significant shift in tone. The big question then is always what happens when the rubber hits the road. We had a big shift in tone back in September, and that saw a very, very big shift up in Chinese stock prices. Since then, they've come back down, not all the way down, but they've come down a fair bit, and then just sort of fizzled. We're expecting a big jump today, but again, how sustained can it be? And again, there are so many more moving parts now because it's not just about China stimulus, it's also about current US-China trade tensions and the US-China trade tensions that are to come. So we had the Nvidia news overnight. We've got more potential for more curbs on Huawei. We've got the drone concerns that you were mentioning. So there's a lot going on there. And Chinese stocks are very cheap. They're very cheap for a reason. The question for investors is, are they cheap enough to make it worth putting some skin in the game?
The other proxy we always look at is, of course, the Aussie dollar. Is there now sort of two drivers for strength in the Aussie, with the RBA, comparatively still looking hawkish until next year?
Yeah, that's very likely. The Aussie dollar had its biggest jump in about a month in response to the Beijing announcements. Now, that biggest jump in a month was about 0.8%, so it wasn't all that huge, and that's a guide to how down the Aussie has been. Despite a relatively hawkish RBA. There's two things going on there. One is the RBA didn't go as high for its peak rate as some of the others did. And then the other thing, and this is where the real test comes today, is the market over the past couple of months has consistently been pushing ahead of the RBA towards rate cuts, and then the RBA forces it back. We had a very weak GDP print for the third quarter last week. That saw the market substantially shift so that it actually sees a coin flip for the February meeting, and at some stage it's been fully pricing in a move in April, even though May would definitely be a better fit considering the way the RBA tends to operate. So I would think the chances are that the RBA does push back, that you do end up with May as being the first meeting where you get serious pricing for a cut, and that's a pretty long way away, and there's a lot of data to come before then. So that kind of scenario should see the Aussie dollar push higher, especially because it's at pretty low levels relative. It's only last week or so after that GDP report when the Aussie was flirting with the sort of levels that have rarely been seen outside of sort of 2022.
Garfield Van also leads our Markets Live Asia coverage. As we continue to watch those China-exposed assets, we are expecting Chinese stocks perhaps to see some gains when trading opens later. Beijing signaling bolder economic support amid a possible trade war with the incoming Trump administration. A gauge of U.S.-listed equities already surging almost 9% in the New York session. For more, let's bring in our Chief North Asia correspondent, Stephen Engel, in Hong Kong. Steve, is this the policy move that markets have been waiting for?
Well, I just want to pick up on what Garfield said, and that is, after September's rate stimulus moves, there was lots of euphoria and markets soared up, but then it kind of petered out on promise fatigue. Again, and that's why we've been sort of waiting for any kind of signal, either from the Politburo meeting yesterday or again tomorrow, which starts a two-day meeting of the Central Economic Work Conference, which will take the marching orders from the Politburo, and by tone alone, it's a good sign, obviously. Actually, Morgan Stanley's Robin Shing says essentially that they sent the most aggressive stimulus tone in a decade. And here you can see the stances that the Chinese government has set on monetary policy. So the last time we saw moderately loose tone was essentially during the global financial crisis in November 2008 to 2010. The last nearly 14 years has been prudent monetary policy, and they've been pretty steady on that. Now, given all those headwinds that Garfield ran through and that we've been talking about for so long, essentially, of course, the property market hasn't found its floor, the consumer hasn't found its confidence, EV makers haven't found profitability. On top of that, you have the Trump trade threats of tariffs. So now they're going to be switching to, for the next year, 2025, again, a moderately loose monetary policy stance. And essentially that opens the door for further easing of interest rates and potentially stock market stabilization fund, more stabilization for the property sector, perhaps even widening the budget deficit from 3% to allow more, government borrowing. So again, the kind of stimulus that the market's been waiting for, but not a specific number. Keep in mind, the Politburo sets tone. It doesn't set specific targets. Now, the Central Economic Work Conference, which starts tomorrow, will then sort of flesh out the details of the tone that was set by the Politburo. The top 24 government officials led by Xi Jinping meeting yesterday. Now the Central Economic Work Conference will set the priorities for the National People's Congress that begins in March. We might not get any of those fiscal stimulus targets until March, or we could possibly get it at the conclusion of the Economic Work Conference on Thursday, but I'm not holding my breath for that.
Steve, what was sort of more interesting to you that we heard from that Politburo gathering?
Well, what was interesting is they ran through the whole laundry list of problems facing the Chinese economy, and there's a long list of them, so they addressed them, and I'll run through them very quickly. They had made a direct pledge to stabilize the stock market as well as the property sector. Okay, good start. Also, they touted extraordinary measures are coming for counter-cyclical policy adjustments, which basically hints at greater bond issuance or a stabilization fund for the stock market, as I mentioned. They also signaled a growth target of around 5%. They didn't set that target. That's the same as this year, by the way, and that full-year goals will be met quote-unquote smoothly. They also pledged to continue to push for technology innovation and building a modern supply chain. They went on to say that they're going to continue with the progress of economic reforms, including some iconic measures. But again, no specifics on what those iconic measures are. They also re-emphasize, again, the Politburo, the party's big meeting with Xi Jinping at the top. They emphasize political supervision. Discipline within the party has been a key element of the anti-corruption probes across the entire Communist Party, the PLA, and everything. So that is emphasized as well. But really, the key takeaway here is that boosting domestic consumption will be a top goal. Will it be the top target and the priority, I should say? That will likely be determined with the policies that we're going to get through the Central Economic Work Conference that will be reinforced and voted on at the National People's Congress in the first week of March.
Almost that time again. Our Chief North Asia correspondent Stephen Angle there with the latest. And coming up next, we'll be speaking to Fitch Ratings a little bit later on whether the political turmoil in South Korea will impact its credit ratings. This is Bloomberg.
Korean stocks gaining ground for the first time in 5 sessions. This, as we're now seeing lines from the opposition leader Lee Jae-myung saying that he will pass the budget today, that passing the budget will help clear uncertainty. He's still calling for the ruling PPP to join a Saturday vote on impeachment. Of course, this has really been one of the main issues and contention points between the ruling party, between President Yoon Suk-yeol and the opposition, the budget issue, a budget that has been downsized by the opposition. Our reporter Sang-mi Cha joins us now for the latest developments in Seoul. Are we getting a little bit more clarity on where this political fight goes from here?
Yeah, so this is very breaking news. Lee Jae-myung is speaking as we're speaking now, and so he said that he's going to stop weighing on this economic turmoil now and then pass the budget. But on the People Power Party front, we're watching whether they're really going to come up with a roadmap to let President Yoon go in that orderly exit plan that they wanted to, push for instead of the impeachment vote. So again, what Lee Jae-myung is saying is they want the ruling People Power Party lawmakers to come and vote for that impeachment on Saturday, but they might actually turn that down. So we'll have to see how it unfolds from there. A lot of moving puzzles here. It's just, and so we will see whether this will go through. We're watching also the Defense Committee. There's going to be a lot of people who were involved in that martial law order in a couple of minutes, and then they will be speaking in the Parliament. So we'll be watching that.
Yeah, we have seen a lot of multiple investigations also going at the same time, and we're still trying to figure out if that impasse between the opposition and the ruling party breaks at some point. But it seems investors perhaps are a little bit more encouraged because the Kosdaq gaining ground today, although the Korean won, I gotta say, has lost a lot of those earlier gains.
Yeah, the Kospi is gaining as much as 1.6%. That's the first time, if they do hold these gains, it's going to be gaining after that 4 trading sessions since the martial law declaration. It seems like the investors are saying that this could be a technical rebound, and they are expecting that this political turmoil and instability might not last as long as they expect. So that would be a good news for the Korean market. And also the officials, especially the financial authorities, have promised that they have seen too excessive kind of meltdown in this economic and the stock market especially. So they're saying this is the very strong comments that they have started off the day with. So they are going to come up with more supportive measures. There are a lot of stabilization funds and a lot of measures that they can play with here. So we're watching on those fronts as well.
Our reporter Sang-Mi Cha here joining me in Seoul. Thank you so much for all of the latest updates. Now, Fitch Ratings says political risks in the aftermath of the president's swiftly revoked declaration of martial law are likely to remain elevated in the coming months. Let's discuss this with Jeremy Zook, Fitch's Director of APAC Sovereign Ratings. Jeremy, great to have you with us. How much of a material difference would it make on the South Korean economy if that budget actually passes today?
Yeah, good morning. Thank you for having me. Certainly this environment of heightened political risks and uncertainty does pose some challenges for the economic outlook next year. Our current forecast is a 2% growth rate in 2025. There are significant challenges, though, from certainly the global trade environment, and the political uncertainty doesn't help on that front. Certainly, we've seen, there's the possibility of strikes until President Yoon resigns or is impeached. There is also the potential that we see this political uncertainty dent investor confidence and dent consumer confidence. And that could materially have an impact, although short-lived impact on economic growth. So, steps that help to provide a bit more clarity and certainty on the economic front, such as passing the budget for 2025, do help to provide a bit clearer of a roadmap and do potentially alleviate some of those economic challenges for next year when it comes to investor sentiment. So we'll be watching quite closely. I think the other thing that we'll be watching, of course, is what this power sharing between the ruling party and the president looks like, and what the roadmap is for this timely, essentially, removal of the president going forward.
Right. Do you have sort of a roadmap from past cases where we've seen this sort of volatility? I mean, we do have instances with former President Park Geun-hye actually being impeached back in 2017. So how much damage did that cause to sovereign credit profiles here in South Korea? And can we expect something similar with a caveat that the South Korean economy right now seems to be weaker?
Yeah, I mean, Korea has been through periods of political volatility previously. The martial law declaration, although short-lived, does seem to be a bit more of a heightened situation relative to what we've seen in the past. But as you mentioned, we do have a relatively recent case with the impeachment of President Park in 2016 and 2017. In terms of the rating, so the rating remained stable throughout that period. The impeachment followed constitutional processes, institutional norms, and so it didn't really have a fundamental impact on how we viewed institutional quality. Our base case is that it would be very similar this time around. The economic impact is something that we will have to watch, but it will be more of a case of whether this fundamentally impacts Korea's, the factors that underpin Korea's relatively robust economy compared to other AA peers. And that's not our base case right now. We may see some headwinds, some challenges, but we do expect those to be short-lived and resolved kind of once the political crisis passes.
How many of those headwinds potentially come from external volatility too, right? We're going into potentially a lot of unknowns for global trade and supply chains next year. Do you think the trade protectionism story will again impact Korea, given how externally vulnerable that economy is?
This is certainly a big factor for our growth outlook for next year. So Korea is, as you say, very exposed on the external front. And in our base case, we've now incorporated 60% tariffs on a subset of goods exports from China to the U.S. And so that will impact Korea. Korea sends a lot of intermediate goods to China that are ultimately exported to the U.S. So that will have a detrimental impact on Korea's growth next year. And certainly risks are still tilted to the downside relative to our 2% forecast because of those quite significant uncertainties. On the global trade front, we really just don't know. And while we've incorporated these 60% tariffs into our base case, there's a high degree of uncertainty on this front. But for Korea, Korea is quite exposed, and not just on the tariff front, but also when it comes to semiconductor restrictions by the U.S. Korea, of course, a major semiconductor producer. And so that political uncertainty when it comes to semiconductor and the semiconductor industry, I think is quite potentially a large challenge for Korea to manage, not just next year, but over the next 4 years.
It must then be encouraging to see already sort of proactive signalling out of China, right, given its role in global trade to put through more stimulus, sort of the change in language and the tone as well. Do you think that meaningfully changes the outlook for Korea as obviously a key cog in that global trade picture?
The messaging from China yesterday was relatively positive in terms of our expectations for more monetary and fiscal support next year. This is something that we've been expecting for some time. I think it will matter, whether there's follow through on the announcements that came from the Politburo meeting yesterday. On the monetary policy side, we see this as not necessarily being all that effective in the current environment in China. So it will really come down to the fiscal side of things and whether the government, as they've indicated, increases the fiscal deficit next year and increases debt issuance by local and the central government. For that, we think we'll have to probably wait until March to find out more details on the fiscal plan in China. But certainly more fiscal stimulus in China would help support the growth outlook. We have a 4.3% forecast in China next year, and that would have knock-on effects, positive knock-on effects for Korea's outlook, and perhaps help them to manage some of these new political uncertainties that have emerged in the past week.
Jeremy, really great to have you with us. Jeremy Zook is a director at APAC Sovereign Ratings at Fitch Ratings with us. And just a reminder that the US Treasury Secretary Janet Yellen will be joining Bloomberg Television on Wednesday for our exclusive conversation ahead of her departure. That's at 11:30 p.m. Hong Kong time on Wednesday, 10:30 a.m. if you're watching in New York. This is Bloomberg. Take a look at how futures in Europe are opening up after what was a pretty decent session when it comes to that boost from China-exposed names, luxury, mining amongst them. But it does look like we're seeing a bit of a fade coming from that announcement of monetary and fiscal stimulus plans from China, really benefiting those sectors. You're seeing Euro Stoxx 50 futures looking a little bit softer there by about 0.4%. German DAX futures also a bit weaker there. We're also watching that vulnerability when it comes to UK stocks as well, particularly as we see those constituents within the FTSE 100 that are looking cyclical, and just the weakness and perhaps the uncertainties when it comes to where the economy is going from here is likely to weigh. But the ECB's rate decision, of course, in focus. Some of those geopolitical developments in the Middle East also being very closely watched as well. It'll be very interesting to see whether we see that kind of China luxury rally fade, given that we saw stocks like Richemont, LVMH, Burberry all surging, resources also rising by over 3% on account of expectations of better Chinese demand. More ahead on the Asia Trade. This is Bloomberg. We're getting breaking data just crossing the Bloomberg when it comes to business confidence here in Australia. Of course, this coming through on RBA Day as well. Business conditions, they're falling to 2. That's according to data from National Australia Bank. Business confidence falling to -3. Now, this is actually, when it comes to business conditions, falling to the lowest in 4 years, falling 5 points from a month earlier to 2. That is the lowest since August 2020. And this area is, of course, the economic growth picture, the confidence picture continues to stay pretty tepid. It is a big challenge for the RBA at a time when we know that expectations for rate reduction is not until April and potentially May next year, given Michelle Bullock's recent comments that inflation broadly still remains too high for them to be considering any kind of easing in the near term. But it certainly does make for sort of further pressure on the central bank as we get into today's decision as we continue to see these economic indicators weaken. Shery.
Pressure in many central banks across Asia right now. The Bank of Korea also coming out this morning saying that they have sufficient capacity to respond to the market given the volatility that we've seen here. Although for today's session, we are seeing the Kospi now gaining ground for the first time in 5 sessions. The Nikkei is also up 0.3% as we are headed towards the Bank of Japan's Tankan survey and its decision next week as well. And we are also following some Nvidia suppliers because overnight we saw that China had opened a probe over suspicions that Nvidia broke anti-monopoly laws around a 2020 deal. And that's the point right now, isn't it, Haidi? It's really about that tit for tat when it comes to Beijing and Washington. We have seen more investigations now into Nvidia. China really putting this key player in the AI chip market as a key corporate target when it comes to that tit-for-tat with Washington. This as the U.S. has also, of course, increased some export restrictions. And Haidi, we have also seen China cutting off some drone supplies that were critical to Ukraine's defense. And we continue to see this back and forth between the two sides and really a looming threat of potentially more tariffs in 2025.
Yeah, and Shery, what's interesting is that this is not just a Trump, president-elect thing, right? This is sort of started with the Biden administration as well, continues into the last months of the Biden administration. We can only assume that that sort of rhetoric carries through when President Trump returns to the White House as well. It's interesting you mentioned the drone story. That was quite fascinating that we have seen this kind of escalating conflict over trade now extending to these drones that have really become a vital part of Ukraine's defense effort. We've seen manufacturers in China now recently beginning to limit sales to the US and of Europe of key components used to build unmanned aerial vehicles. This is according to multiple people with knowledge of these developments, and really kind of seen as a prelude to a broader export restriction piece on drone parts that officials in the West have expected Beijing to enforce in the new year. So we could see that impacting license approvals based on the intended use of these components, or just softer requirements for Chinese companies to notify the government of their shipment plans. So So this could play out in a lot of different ways, but we continue to watch that very closely. The other story that we're also hearing is Huawei suppliers are also set to face further US limits under this new defense bill as well. So we're hearing that US lawmakers are moving to prohibit the Pentagon from doing business with companies that sell chips and services to Huawei technology. So this really kind of, continues with the National Defense Authorization Act that was unveiled over the weekend. Very interesting that we're getting to the end of the year. We're not even in the new administration yet, but that these developments are coming in thick and fast. And when it comes to geopolitics, Shery, there are some other stories that we're following from around the world this hour. Taiwan has put troops on high alert after saying China restricted airspace off its southeastern coast and sent naval vessels near the strait, separating them. It is a potential sign that Beijing is preparing for military drills in the waterway. It follows Taiwanese President Lai Ching-te's recent visits to the US territories of Hawaii and Guam, which Beijing has condemned. US President-elect Donald Trump says he's had communication with Chinese President Xi Jinping in recent days. This is the first clear indication of direct contact between the two since Trump's re-election in November. He told NBC about the exchange in an interview that was taped last week, but didn't specify what was discussed. Shery.
And Haidi, Binance Holdings CEO Richard Teng believing that the future is bright for crypto. He spoke to us about his expectations for the market ahead of the return of U.S. President-elect Donald Trump.
If you tell people before 2024 Bitcoin will hit 100,000, there'll be ETF being approved for Bitcoin, Ethereum, Solana, and several others. And as well as institutions, the largest asset manager in the world, BlackRock, has gone from a skeptic to believer. I think people will not believe it. But come to the end of 2024, all those have come true. We have now a very crypto-friendly president in the States and extremely smart strategy appointing an AI and crypto czar on that front, because this too represents the most innovative technology for the future, and countries will do extremely well. Abu Dhabi this week, the capital of capital, again, Abu Dhabi and UAE has been very foresightful in that front to start investing AI, blockchain, to move those very early on. So we are seeing the results of all those deployment in Abu Dhabi and UAE now. So countries will do very, very, very well to continue to focus on these two technology. And we will continue to focus on serving our fast expanding user base. We're close to 250 million users globally now, 70 million onboarded this year alone. So we are very excited with the journey ahead.
But of course, Binance is under monitorship by the US DOJ and the US Treasury's Financial Crimes Enforcement Network. Would you be looking to press the Trump administration to shorten or terminate the monitorships, given the president-elect's kind of preference, as we say, for looser crypto regulation?
Well, any of those discussion, I think, is new. I believe that compliance is the way to go, right? So Binance has always been a user-first organization. But going forward, given that regulations is going to be much clearer throughout the world, we have the ability to invest very heavily in compliance space. I want to make compliance a competitive advantage for ourselves, right? So last year alone, we invested $213 million just on our compliance program, which is a more than 30% increase compared to before, and this year it go up even more. We are the most licensed and regulated exchange globally now. We have more than 20 different jurisdictions that license and regulate us. More recently in exciting places like India and Argentina. So we are working with global policymakers, lawmakers, to really support the crypto journey, support the crypto deployment. And we continue to work very closely with US monitors on that front to continue to see whether there are areas that we can enhance the program further. I think is a good competitive advantage. We are able to invest in places that our competitors are not being able to invest in.
Binance Holdings CEO Richard Teng speaking with Bloomberg's Lindsay Burden. Take a look at how some safe haven assets are trading at the moment, because we have seen gold rallying recently, not only on expectations of where the Fed will go from here. We've had persistent central bank buying as well, while it's holding its advance before the U.S. data on inflation could alter the shape of the Fed rate move. Right now, under a little bit of pressure after the New York session. This also after we saw those gains with China resuming buying as well, and the tensions around Syria also boosting haven demand. Gold, dollar not doing really that much, and oil down slightly after climbing in the New York session, and all to do with China signaling more stimulus for next year, as we continue to keep an eye on the latest from policymakers there, Haidi, as we are also watching the tit for tat between Beijing and Washington.
Shery, coming up next, we get the outlook when it comes to the Australian economy ahead of the RBA's policy decision. HSBC Chief Economist for Australia and New Zealand, Paul Bloxham, joins us in today's Australia Ahead. This is Bloomberg. Well, investors are looking ahead to the RBA's policy decision in just a few hours' time, and markets are not pricing in, of course, the rate cut until the first quarter of next year. April potentially more likely, would looking like May. Economists surveyed by Bloomberg now expect the RBA to move their cash rate target in May, so that's 3 months later than the previous outlook. Joining us now is Paul Bloxham, who's a chief economist for Australia, New Zealand and global commodities at HSBC. Paul, great to see you. We just got the business confidence and business conditions numbers, and they were pretty terrible. GDP was pretty terrible. You've got McKinsey calling Australia an economic problem child, and yet inflation for Governor Bullock and the RBA is still too high for them to move quickly.
Well, that's right, and I think that's what we're going to hear from them today as well. The story here is that demand has slowed down in the economy. That's definitely true, and the indicators you're pointing to tell us that demand has weakened. But the supply side of the economy has been very weak as well. Productivity has been going backwards. Last week's GDP numbers told us productivity was falling, and as we know, if you want to get inflation down, you either slow down demand or you speed up supply. So we've slowed down demand a bit, but the supply side is so weak that inflation's taking a while to come down. It's proving to be sticky. It's still too high for the RBA.
We have another wave of China enthusiasm, expectations of stimulus. Do you think that makes a meaningful difference for Australia?
It could do. We'll have to see exactly what it looks like. But yes, you're right. A lift in China's growth would be something that would be a factor for Australia. It would be supportive of the resources story, of course. And that would just be another factor that would potentially add to the RBA not being able to cut rates quite yet. As I said, you've got to slow down demand or speed up supply. If we do turn out to be in a bit of an economic upswing over the next few months, partly on the back of China's stimulus or partly on the back of the fact that the consumer is starting to spend a little bit more, then that just might delay the idea that the RBA cuts rates a little bit further, even further.
It's certainly good for commodities, as you can see. That's clearly the share market reaction today.
Yeah, that's right. It's certainly the news that we got from China about they're looking to bolster growth with more support, and of course that particular comment around the fact that they've shifted the stance of the monetary policy towards being modest loosening rather than being prudent and so on. That's all factored into some improvement, as you say, some lift in commodity prices, which is where you'd expect it to see it, and a bit of a lift in the currency as well. The Aussie dollar risk assets have improved a bit on the back of an expectation that we're going to see a bit more support coming through at some point.
How much is a bit? Does that Politburo change in tone affect your outlook for 2025? Does it meaningfully impact Australia, or is this marginal?
I think the main story for Australia is still a domestic story. And so, domestically, what we're seeing is that growth has been really quite sluggish as we've been trying to get inflation down. But as I noted, the productivity side of things, the supply side of the economy is also still very weak. So when we look into 25, we do think growth is going to pick up a bit. Partly that's because the government has delivered more fiscal stimulus. Public demand is running quite quickly. We're running towards an election in Australia by May of next year. So partly it's domestic stimulus and public demand that's supporting things into next year. And then on top of that, we do think that there's going to be a bit of support from that China story too, and we've got to watch out for how big that will be. The key challenge, though, is demand. If it lifts at the same time that inflation's still too high, this is going to mean that the RBA doesn't get to cut interest rates as soon. And so our view is that they're not cutting rates until, well, the second quarter at the earliest.
Oh, wow. So when it comes to what's happening in the U.S., how exposed is Australia to potential trade tariffs from the U.S. that could affect global economies? And what is usually the transmission mechanism into the Australian economy?
So the primary question here is, of course, what happens first in terms of trade policy from the US, but more importantly, for Australia, it's then what we see in terms of the Chinese policy response, because it's China that's our major trading partner, and that's where the effect's likely to be biggest from Australia. So that creates a whole lot of uncertainty, as you can probably appreciate, because at first we don't know what the policy environment's going to look like with the new US administration. But then, of course, we don't know what the Chinese policy response is going to be. So particularly watching for what China's policy response looks like, how domestically oriented it is, how much it's focused on the consumer versus how much it's focused on infrastructure and housing, because that's particularly important for the hard metals and the metals that Australia exports. So it's that second layer, that second level, that's the secondary transmission through the impact on China that's probably the most critical part of the story.
Paul Bloxham, Chief Economist, Australia, New Zealand and Global Commodities at HSBC. And we have more on Australia ahead every Tuesday at 11:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. Find it on Apple, Spotify, or Bloomberg.com. Let's now turn to India. It's named career bureaucrat Sanjay Malhotra as the new governor of its central bank. It ends weeks of speculation over who leads monetary policy in the world's fastest growing major economy. Bloomberg's Avril Hong joins us now with more on this. So, Avril, what do we know about the incoming RBI governor?
Yeah, Shery, well, as you said, career bureaucrat with more than 3 decades of experience in public policy, expertise in the areas of finance, taxation, trade even, currently serving as the Revenue Secretary of the Finance Ministry. And he's said to be someone who has close, good relations with the Finance Minister. So there's some optimism that this would mean potentially better coordination between fiscal and monetary policy. He's also said to be someone who has pushed banks to adopt technology, but actually beyond that, we don't know very much about his views on monetary policy. At least this appointment now ends the weeks of speculation about the future of the RBI leadership, because as you know, after the growth shock from the most recent GDP print out of India, there was a heated debate about the future of the RBI leadership, whether the 6-year term of the current governor, Shaktikanta Das, would be extended. Up until yesterday afternoon, we had no clear idea of whether it would indeed be extended and who a potential successor might be. So at least this ends some of the speculation. And as you know as well, at the most recent review, it resisted cutting interest rates on the benchmark, although it did tweak liquidity. And the RBI has been under a lot of pressure to start cutting rates.
Well, we've heard from Malhotra really urging revenue officials in the country to prioritize economic growth. Is there anything that analysts can gauge on how he might shape monetary policy?
Yeah, we have the likes of Bloomberg Intelligence already saying that given his background, he might be someone that's more sympathetic to the corporate slowdown, which you alluded to. And given his, deputy that is coming up, that will be in charge of research is going to be someone potentially with fresh views on monetary policy making as well. So Bloomberg Intelligence takes the view that we might see, the change of guard kind of ushering an RBI that's opening the door towards rate cuts, allowing it to sort of course correct on its restrictive stance. So it sees 50 basis points at the next window. That's the February meeting. But this is not really the base case for most economists. Many analysts have said that they're not expecting many drastic changes to policy making. That is still going to be dependent on the data. They see a window for cutting in the first quarter of next year. Again, this is February. We have the likes of Goldman saying that they expect policy continuity, that they expect there to be a shallow easing cycle, a quarter-point cut in February as well as April. So you have a bit of differing views when it comes to how this governor might be shaping policy going forward. Guys?
Avril Hong there with the latest on India. Take a look at how China 10-year yield is trading right now, because we have seen that fall below 1.9%. This on expectations of more easing to come. Of course, we have heard from the Politburo now announcing a moderately loose monetary policy and vowing to be more proactive on fiscal policy as well. Now, we've heard from news sources as well, like Security News, saying that actually bond yields in China could fall further from here. We'll continue to watch the latest developments in Beijing. This is Bloomberg. One of China's best-known makeup artists, Mao Geping, is taking his beauty company public in Hong Kong, potentially raising up to $270 million. His company, which has defied China's consumer slowdown, starts trading in Hong Kong today. Our Asia Equity Capital Markets reporter Julia Fioretti joins us now with more. And Julia, this would also be the first Chinese brand in cosmetics to trade in Hong Kong.
That's right, and it's been extremely popular with investors, actually. It's a premium brand, and so it's been defying the slump that we've seen for other brands, international brands in China's cosmetics market. And it priced at the top of the range and was actually upsized. So it ended up raising about $300 million, which is more than what it was initially expecting to raise. Investors liked the attractive valuation it was coming at, as well as the growth prospects for the company. It's been growing extremely fast, especially in the last few years. And it's been able, given it's a premium brand, it's been able to keep prices higher and closer to where the international counterparts might have been having them. Whereas typically for Chinese, domestic Chinese beauty brands, prices were lower to appeal to the local consumer. But Mao Geping has been able to buck that trend and actually continue growing at an extraordinary pace. And it's obviously one of the main exponents of sea beauty or Chinese beauty.
Broadly, when it comes to the Hong Kong IPO market, what's been the performance so far, and what are the expectations for next year?
So the expectations are mainly that we've probably hit rock bottom, and that we're now sort of it's an inflection point, and we're going to recover a little bit. That being said, there are a lot of uncertainties, but certainly this year, and especially the last few months since about September, when China unveiled the stimulus, has been a lot better than in the previous couple of years. We've seen large marquee deals come to market. International investors actually show appetite for Hong Kong deals in a way that they hadn't for the last few years. So there's certainly a little bit more optimism, although it's still the appetite is still there mainly for large companies, established companies with established peers as well. So not untested firms in the way we might have seen a few years ago. And next year, hopefully, should be more of the same that we've seen in the last 3 months. And I think there's some sort of cautious optimism for the coming year.
Julia, if you're ready, our Asia Equity Capital Markets reporter there, and perhaps cautious optimism when it comes to the Chinese markets as well. Take a look at how futures ended trading the session, because Chinese ADRs in New York jumped overnight after the Politburo announced a moderately loose monetary policy and, for the first time, promised extraordinary counter-cyclical policy adjustments. Just to say, in Communist Party speak, that means more uncommon tools to boost the economy. So you can see A50 China futures closing higher by 0.8%. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China Show is next. This is Bloomberg.